Hey guys, Genevieve here. So I wanted to give you a breakdown of closing costs that a buyer can expect when they're purchasing a home. These are fees that are taken in addition to putting down your down payment and can be pretty hefty if you're not prepared. Closing costs can be in the range of 2 to 5% of the actual purchase price of the home. So think for a $300,000 home, you can expect between $6,000 and $15,000 just to pay for the process of closing on this property. So let's say that you apply for a mortgage, you're at the very beginning of the process. The lender should give you a loan estimate within 3 days of you filling out your application. This will give you a pretty good idea of the general number you may have to put down at closing if you stay within this budget. Now, once you get to the very end of the process, you're going to get a closing disclosure just a couple days before, and this will give you the final numbers and the breakdown of all the fees associated. So what do these things cover? Well, the first one is going to be your appraisal. This is ordered by the lender and usually costs between $500 and $800 or so. And if you want to learn more about that and what the appraisal really is, you can watch my other videos about appraisals and inspections. The next one we're going to talk about is prepaids. Prepaids are things like your property taxes, homeowner's insurance, and interest. Property taxes are going to be prorated and split between the buyer and seller depending on how long each one will have owned the property for that year. The homeowner's insurance is the premium that you have to pay to Geico or Allstate or whatever company you choose to cover your home. Then the last one is insurance, which is going to be how much is accrued on the mortgage between closing date and the date that your first mortgage payment is due. After prepaids, you also need to fund your escrow account. You can think about escrow as a savings account that's managed for you by the bank that services your loan. So the escrow account has to be funded by you, and it's going to hold about 2 months in reserves of property taxes, homeowner's insurance, and if applicable to your loan, mortgage insurance premium. So that when the bills come next year, you've been saving up all year for them, and your bank can now pay those on your behalf. Next, we've got your loan origination fees. These are actually going to vary pretty widely between lenders, so make sure that when you're first shopping for a mortgage, you're comparing these fees as well and not just your interest rate. After that is your title insurance policies. These are going to cover both the lender and the new owner for any sort of ownership claims made on the property after closing. This is in case title has made any mistakes while they're checking public records, looking at how the property is vested over time, and making sure that you are covered in case someone comes and tries to say, hey, that's my property, the person you bought it from never owned it, and it's not your house. The good news is you can actually negotiate with the seller to see if they'll help you pay for the cost of these policies. Definitely lean on your real estate agent for this one and ask them if this is a market where you can ask for that. How can we negotiate this? What are you seeing? What's the norm right now? You're going to see a line item on your closing disclosure that pays for the title company to do this property search. And lastly, there's going to be a number of smaller items charged for things like an attorney to prep the documents, a flood determination fee here in Houston, filing charges for making sure things are placed into public records properly, and just all the good things that we want to make sure are done so you can get ownership of this property. So if you're not completely bored yet and you want to nerd out some more, you want more details about these fees that you can expect, give me a call, shoot me a text. I'd love to chat about it. So I hope that helps.